Hello everyone and welcome to the short educational Forex video. This time we will talk about the moving average convergence divergence, which of course isn't only for Forex, it's also for all types of trading, but now we will focus especially on trading. So let's first talk about the MACD. The MACD is a technical indicator which you can use to see whether a pair is overbought or oversold, but in general it can help you with trading, help you with seeing the trend, help you with seeing what the sentiment is perhaps. So the MACD stands for moving average convergence divergence. After this video you will hopefully know where that name comes from, and it consists of three parts: the MACD line, the signal line, and the well-known histogram. The inputs for these three parts can be changed, and at first that might seem a little bit difficult. That's why I will also go into trade view and show you what different inputs do for you and how you can alter these inputs to maybe let the MACD fit better with your trade style. And then after trade view I will also go into the limitations of the MACD, because unfortunately it is not the holy grail. So first of all, let us look at the MACD. I've got a nice picture here from TradeView, and here you can actually see the MACD and its inputs, its settings, and here you have it. The blue line is the MACD line, the first one. The orange line is the signal line, the second one, and this is the histogram. The histogram is basically the difference between these lines. So you can see that when they cross, the MACD is at, or the histogram is at 0. So the MACD is an average of two exponential moving averages, so EMAs, which are moving averages which weigh more towards recent price action. So this one is an average of the EMA based on the 12 period and an EMA based on the 26 period. You can also say that this is the fast EMA and this is the slow EMA. So as you might know, but I will make a video especially about moving averages as well, the EMA is an average of prices. This is where the close comes in. This can be open or close. So basically when an EMA calculates the average, will it take the price of a candlestick at its open or at its close? So that's one of the inputs. You can change these two. You can also change, and then you have the last input, and that's a 9. That is only for the signal line, and the signal line is basically the same as the moving average convergence divergence, but then it is smoothed down over the last 9 periods in this case, but you can also change that. So basically it is weight even more to recent price action. You can change that too, but we will get now to trade view and I will show you how you can change these inputs. Welcome back everyone. Now I will show you all of the inputs for the MACD. So when you want to put the MACD into or onto your chart in trade view, you click indicators. At most exchanges it's the same. There's just somewhere you can pick all the indicators. You would just type in MACD and there it is. So this might be recognizable because this is the same I used in the slides. This is the Euro USD, one of the most traded pairs. So here you have the MACD with its inputs. You can see that here histogram goes up, it is overbought, so you might sell here. If you would have sold here, would have taken some time, small sell off. Here they say it is oversold, could have bought here, stop loss maybe down here, could have taken some profit while it goes up. But the main focus of this was to show you how you can change these inputs. So first of all, here you have the style. You can see which one is the MACD and signal here, but also the colors. You can change the colors. Green and red for the histogram is I would recommend that. You can change the colors of the MACD and the signal line however you want. But it's more about the inputs. So here you can choose the indicator time frame, which I would suggest to always put it at the same as the chart, but I kind of have to get back to that suggestion because you have to find your own way of trading, and maybe that is that you want to see the MACD of a higher time frame because you think it's more reliable. So here you can see the fast EMA and the slow EMA as seen here. So there is a general consensus that the higher the period of the EMA, the more reliable. So what you could, for example, do is change this one to 28, maybe this one to 100. And then maybe also change this to, here you can see open, the high, the low. You can also choose lots of things. I wouldn't look at these too much. They have to do with standard deviations. So let's do the close. I think the close is more, it says more about what the price did, for example. And then you can change the signal line here with signal smoothing. So I up these. I kind of want my signal line to smooth over more periods as well, maybe 14. And then you see here that you can also, I told you before that these are based on exponential moving averages. And here you can see that you can also make the oscillator, which is the MACD, a simple moving average, which means that it doesn't weigh more on recent price action. And you can also make the signal line a simple MA. So there's a lot of ways you can differentiate or change this indicator, and that makes it kind of attractive for people to use. Also because hopefully it doesn't seem too difficult to use. So there you can change it. Now you see that it gives quite a different view. You can see that here it used to be oversold here, now it isn't. Here you can see overbought, so you would have sold here instead of, I believe, here. So you would have gained some more pips and less drawdown. So that way you can actually change the MACD and see what works best for your pair, for your time frame, and just for your trading style in general. So I think it is necessary to talk about the limitations and some additions as well, to give you a full view of the MACD and how it works and how you can use it. So the first one is that in general the MACD only works in trends. Same kind of goes for moving averages. You can put some moving averages on a chart, and you will see that in a ranking chart the moving averages will just be in the middle, because it will kind of the average will be kind of in the middle of a range. So when the moving averages don't really tell a story, the MACD won't do the same either. So you should be cautious of that, and you should know that whether a pair or a market is trending or when it's not. Then the same is, or something else, is that it differs over time frames. So the MACD, as you could also see at one of the inputs, you could choose if you wanted to have this MACD on the same time frame as your chart or not. So yeah, that changes because the candles in a different time frame, they are different, so the prices are different, so the moving averages are different, so the MACD is different. Maybe the MACD is more reliable in higher time frames. You see that most of the indicators are more reliable the higher you go with the time frame. But I'm not here to give you advice. I just that is what's kind of known in the community. But you should always do your own research. And then I should also say that the MACD in general does not work on its own. There are results, you can find them on babypips.com, of when a bot only used the MACD and they weren't really good. Of course you can, like I just said, you can alter the MACD in a lot of ways. So it does not work on its own, but it could. You never know. in Forex. So make sure to try it out. See what it has to offer. See if you can make it work for yourself maybe. And with this video I at least hope to have told you how it works and how you could use it and how you could change it and how you can fit it to your own trading style. So yes, that makes the end of this video. I hope to have taught you that, and if you want to know more, if you have questions, feel free to leave them in the comments and I will make sure to answer every one of them.